You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network that continues to grow week after week, month after month. New shows popping up all the time. Just celebrated the 1-year anniversary of the Futures Rundown. Very much the sister program to this one, I should say. And of course, in between, we've added, of course, the European Market Brief, if you want a taste of the European derivatives landscape. And of course, just in the last month and change, adding the Hot Options Report coming at you at the end of every day. So a lot of great stuff. Make sure wherever you're listening to this, you are subscribed to the full network. And of course, if you want to go above and beyond, you want to join us for awesome pro Q&As, early access to content, exclusive shows like Options Oddities, and maybe on hearing rumblings about another upcoming Vol Deathmatch 2.0. If you want to check all that out, theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us in the CME Group hot seat this week, I'm pleased to welcome on a newcomer to the program and indeed to the network, and he gets points for the coolest name of the week. He is Vicioso, the head of cryptocurrency products over there at CME. Gio, welcome to the This Week in Futures Options program and indeed to the network, sir.
Thank you so much, Mark. I'm super excited to be on the show. Thank you for having me.
Vicioso, I love that. It's a great last name, sir. Gio Vicious. Does everyone call you Mr. Vicious around the office, sir?
You know, that's funny. I have, well, not around the office, but I have heard vicious in the past for sure.
I like it. All right, Gio, as we like to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of derivatives, as well as what it is that the global head of crypto does day to day over there at CME.
No, for sure. So I'm Giovanni Vicioso, global head of cryptocurrency products at CME Group. My background prior to joining CME was in equity derivatives, working at large banks. I've now been with CME for a little bit over 13 years. Initially working on the equity products and alternative investments team, where I focus primarily on developing non-equity index products such as water futures. Now, this led me to work on our pioneering Bitcoin reference rate, which we launched in 2016. And then, of course, the launch of our cash settled Bitcoin futures contract in 2017. And now I just focus on really continuing to grow our suite of cryptocurrency products, which of course includes both futures and options on futures on now Bitcoin, Ether, Solana, and XRP.
You're adding a few new ones to that list. And since Gio is joining us here on the show, we're going to mix it up a little bit. We'll save the movers and shakers for a little bit because it is time, listeners, to kick things off in crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody, welcome to the wild world of crypto. If you've been paying attention to any of our programs these days, not just TWIFO, but of course the Futures Rundown, or indeed the Crypto Rundown every Monday, you know that it's been a wild year, indeed a wild couple of months in the crypto space. So, Gio, you guys have good timing to add to your suite of offerings over there at CME. Obviously, everyone who's listening to this show knows you've had Bitcoin and ETH for a while, both the big and the micro, but just adding, just in the last couple of weeks coming online, October 13th, Solana and XRP options now added to the stable. So let's start there, Gio. They are the newest additions to the complex. Why now? Why did you think it was time to add Solana? And a lot of people probably are even more curious. Solana been moving quite a bit, and expensive underlying. XRP's sub $3. So why XRP? Why now, Gio?
Yeah, we're really absolutely pleased with the early activity that we've seen on our recently launched options on Solana and XRP, which we launched on October 13th. And for us, really the key signal is that we were seeing, we're now seeing active, round the clock, on screen quoting across the entire option suite, and that's from the large contracts down to the micros. So it isn't just passive interest that we're seeing; we're really seeing deeper market engagement. We saw some initial block trades from prominent institutional players like Wintermute, Superstate, Cumberland DRW, and Galaxy. And that's really a huge positive sign for the long-term success of these recently launched products. I think the main takeaway for us is clear. Institutions as well as individual investors are really looking beyond just Bitcoin and Ether. They need regulated, capital-efficient tools to manage their risk and execute, say, more nuanced hedging strategies, across a broader range of high growth, say, digital assets and in, say, Bitcoin, Ether, Solana, and XRP. But we have to be cognizant that it does take time to build new markets. But this positive early engagement really validates the demand that we started seeing, first with the Solana and XRP futures contracts that we launched earlier. These contracts are already providing traders with the essential additional tools that they need to really further enhance their growing cryptocurrency investment and hedging strategies. And I think, when you look at that decision to launch these options on both Solana and XRP, it's really purely a function of market validation and the growth that we're seeing in the underlying futures contracts. These are, in terms of futures on Solana and XRP, hands down, our fastest growing cryptocurrency contracts to date. And you really only need to look at the numbers to really understand why. We look at XRP futures. XRP futures achieved 1 billion in open interest in just about 3 months. That is our fastest cryptocurrency contract to do so. Solana futures took only 18 days to surge from 1 billion to 2 billion in open interest. And this growth has really translated into strong trading activity. Through October, Solana futures have been averaging a record 12,700 contracts per day. That's over 500 million in notional traded daily. and trading since launch exceeds 42 billion. When we look at XRP, we're seeing very similar trends. XRP is trading nearly 600,000, or has traded nearly 600,000 contracts since May, representing close to 28 billion in terms of notional. Now, this is really deep, consistent liquidity in the underlying futures, and that's really the bedrock. And once you start seeing that type of deep liquidity, options are really the next natural step, in the evolution, say, of a healthy derivatives market. And really the success that we've seen with our futures on Solana and XRP prove that there's a really sound foundation for options. And I think as the market matures and we start seeing more sophisticated participants enter, there's really like greater demand for that nuanced toolkit. Now, when you consider like futures, futures allow investors to take directional views, hedge position, but options offer them the ability to do additional things. They allow them, for example, to be a little bit more precise in terms of managing their risk. They can be more capital efficient, allowing market participants to express a view with less upfront capital. And they could also be used to execute some more advanced strategies, for example, covered calls, straddles, collars. So really, as the crypto market continues to mature, the sophistication of market participants grow, and so does the need for additional tools to manage exposure. And this is one that's really increasing just beyond, say, Bitcoin and Ether. So by offering options on Solana and XRP, we are really deepening that regulated derivatives ecosystem and really allowing clients to have, those right tools to help them manage risk across a wider basket of digital assets.
So I think it's fair to say, it's only been a couple of weeks, fair to say the demand has been strong out of the gate, Gio?
100% for sure.
Well, you mentioned Bitcoin and Ether. You're right. Those are kind of table stakes in the crypto world these days. You have to have Bitcoin and Ether to kind of get in the door. But now people are asking, what else do you have? And now CME, as you mentioned, has XRP and Solana to add to that stable, I should say. So that might surprise some people that you would expand the offerings to some of these secondary coins, which raises the question, where else are we going in the crypto landscape? Obviously, there's a lot of activity, a lot of names moving in and out of the top 10 in the market cap out there in crypto on an almost daily basis. CME, when you're setting your sights on the next asset, how do you evaluate which ones to add to the complex? What I'm really asking, Gio, is can we look forward to perhaps a Tron or a Dogecoin coming to CME anytime soon, sir?
Well, Mark, I think that we always look at always listening, say, to clients, right? And I think our approach in terms of launching derivatives on any new token is really, disciplined and client-driven approach. I think for us, the most important factor is really having that clear and sufficient client demand. So, we won't introduce a new product unless it really helps and addresses a client need, like a real risk management problem that clients may be facing. So we spend a lot of time speaking directly with institutions as well as retail platforms, helping to validate their interest, taking input on the precise product design. Additionally, there really has to be that strong and proven market maturity in the underlying asset itself, right? As for any new options contract, we would also need to wait and see that there is sufficient established futures liquidity, as I spoke a little bit earlier about what we saw with Solana and XRP, because that really helps to ensure that the market is deep enough to handle institutional scale trading. So this is, a disciplined, client-centric strategy, that we've been following, and why our cryptocurrency suite, which of course includes futures and options on Bitcoin, Ether, Solana, and XRP, has achieved such success. We have market-leading liquidity now that in Q3 exceeded $14 billion in terms of trading volume.
Well, I mentioned this table stakes to offer Bitcoin and ETH, but they are still the ones that attract the lion's share of the people, and especially on this show, for a long time, we were kind of lamenting, we want these products to succeed. We want to talk about them week in and week out on the show. And yet the volume took a while to really catch on. From your perspective, you were there, as you mentioned, at the start of this complex at the launch of the initial products. Why do you think it took such a long time for the Bitcoin and the Ether futures and indeed the options to catch on in the marketplace, Gio?
Yeah, I think that's a great question, and I think that requires looking back, maybe not just looking forward, right? But I think fundamentally, it took a while because it simply takes time to build new markets. Especially when you're talking something as nascent as crypto as an asset class. So you first need to see liquidity grow in the futures market before you can successfully say introduce options. And it's really easy to get caught up sort of in the momentum that we see today. But if you just look back 3-5 years ago, we really didn't have the same market structure or trading sophistication that we're enjoying now, right? So in those days, there was a convergence, say, of regulatory uncertainty. The market was still immature, and there were just inherent complexities with trading, say, spot crypto, that initially really slowed adoption, particularly around options, on Bitcoin and Ether. But I think that now we are clearly in a new era for crypto. The growth has really been spectacular and really proves that our regulated model is working, right? When we look at futures, we are now averaging over 250,000 contracts per day year to date. That is more than double the volume that we saw in 2024. On the option side, we've seen average daily volume similarly double, and our options open interest is rapidly approaching a record $10 billion, this month. So while the initial delay was just part, let's say, of that initial or that maturation process, I think institutions were waiting for that right blend of regulation, product clarity, and most importantly, that deep, reliable liquidity. And that's exactly what we've been able to establish today.
Well, Gio, I'm following along with our live chat as we're talking here. If our chat is any indication, they're excited about this. We have a lot of people saying they're excited and or surprised by XRP options, which is always fun. And a lot of them also really excited about Solana options. I knew that one would definitely resonate with our audience. So there you go, Gio. If our chat is any indication, the folks are excited by these.
Yeah, we love hearing that.
All right. Let's keep rolling here then, because, we just talked about the Bitcoin and the ETH and some of the fits and starts they had getting started. One of the things that helped smooth the way was, of course, the launch of the micro. I think it's clear, and for a lot of people to see early on, the initial products, the 5X Bitcoin, I think it was 50 Ether. Those were just enormous. They were outside of the reach of most retail participants. They were clearly aimed at institutions and folks who were looking to generate ETFs who needed that type of size. But for a lot of the folks listening to this show, especially on the active retail side, they needed a more bite-sized contract. So you came out with the micro, and they've been interesting to watch the evolution on that front as well. So as you're crunching the numbers there, Gio, where are you seeing the most growth these days? Is it on the larger, more institutionally oriented contracts, or is it on the smaller, more bite-sized micro contracts?
Yeah, so it's a great question. I think when you look at at our data and taking a look, say, at both our large and micro options, it really tells a good story there, and it tells a story really of deepening and maturing market, and we're really seeing growth on both sides. But the split clearly highlights the dominance of our larger contracts and really the dominance of institutional capital, right? So in terms of contract volume, the micro options are soaring. They're averaging more than 3,600 contracts per day. That's up over 2x from where we were last year. Conversely, our large options are averaging about 500 contracts per day, only up, say, 7%. So this sort of tells you that the micros are kind of like that vehicle, perhaps for high frequency, and granular trading, right? Now, when we look at the notional value, to the point that you made, Mark, with respect to our Bitcoin contracts, say, being five Bitcoin, and our micro contract being a tenth, right? When you look at notional value, this is where you really start seeing that large institutions are driving the market, right? Our large contracts are averaging, and when I speak about the large contracts, looking at both, say, Bitcoin, Ether, Solana, XRP. So looking at those large contracts, they're averaging over $200 million per day in notional. That's an 80% increase from where we were, say, in 2024. The micro contracts, while they are rapidly growing, they're averaging about $13 million per day. And the same pattern holds true for open interest. While micro contract open interest is nearly up 2x to about 46,000 contracts, the notional open interest for our large contracts is really what matters most, and that's running at over 4.2 billion year to date, and that's nearly double what we saw last year. So I think that the takeaway is clear, right? The micros expand access and allow for more precision trading, but the large contracts really remain the engine for institutional risk transfer and more strategic capital allocation.
When you first saw these contracts come online in CME back in what was it, 2017, there was a lot of interest, particularly when the options came online after the futures. A lot of people were looking to overwrite some of their existing Bitcoin holdings and generate some income that way, your traditional covered call. And there was, of course, a lot of interest in hedging. But for a long time, a lot of people viewed the lens of, particularly around Bitcoin options, the primary use cases were generating income and hedging their long positions in the underlying. Is that still the case, Gio? Or have we seen a bit of an evolution of the use case out there?
Yeah, I think if we look, last, 12 to 18 months, right, I would say that institutional interest has really undergone, and to your point, a notable transformation, right? While risk management really remains our core function, the focus has expanded, dramatically beyond, say, simple hedging of spot positions, right? The market has since matured. We're seeing institutional players now more focused on arbitrage and active yield generation strategy. So that shift has been fueled really by a few things. It's regulatory clarity, more regulatory clarity that we're seeing since the new administration has been in place. We're seeing greater liquidity, right? And sort of like investors search for new sources of return, right? So I think crucial to this and a catalyst to this has really been also the launch of regulated products like spot Bitcoin and Ether ETFs that have really accelerated, say, the growth of our futures contracts, even, right, by creating, say, more regulated access points for traditional investors, right? So we see like institutional activity concentrated around a couple areas. One of them is yield generation. So we see the basis trade, for example, being a significant driver of volume, where institutions are, say, buying spot using, say, the ETF as a wrapper, and then simultaneously selling futures against that. And that strategy really helps them to capture that spread between futures and spot, creating, a steady market neutral yield, right? And then, as the market, say, has matured, we're also seeing institutions now look to deploy, more traditional, sophisticated strategies, right? So we're beginning to see some firms now, as liquidity has increased, we're beginning to see some firms now look to execute more stat arb strategies, for example, right? And certainly the expansion of options, to products like Solana and XRP just helps to further support this, right? It really provides institutions with that new set of tools to help them express directional views, but also offering them the ability to perhaps collect premiums through, sophisticated yield writing strategies. But it's really confirming that the professional crypto market is really now, highly diverse and active.
One of the debates we've had ever since these products launched and ever since we launched our crypto rundown program on the network, and of course saw these products start trading at CME and have added them into our rotation on this show, is what role do they actually play? I mean, where does crypto fit? The initial promise was this uncorrelated asset class that you could put in your portfolio alongside your equities and your fixed income and your gold, and it would move unlike any of those. And then, of course, we've seen in recent years that narrative kind of shift. Most recently, we're seeing, Bitcoin in particular moving in lockstep with a lot of the major markets people are trading already. So the S&P and Bitcoin hitting new all-time highs. Throw gold in there as well. The gold Bitcoin narrative starting to heat up again out there as well. So there's a lot of talk about the cross-asset correlation, something that we've touched on many times. We usually do it here on this show in the middle of the year and at the end of the year. So I'm looking forward to checking in on it again. But from your perspective, Gio, this growing correlation, at least for right now, between Bitcoin and some of these other major asset classes, whether they be equities or gold or pick your poison out there, has that been a driver of flow for you guys over there at CME? Are you seeing more institutions and retail becoming interested because this asset class is moving in lockstep with the others? Or has that been on the other side, were people more interested in an uncorrelated asset class, and is that maybe driving them away a little bit? What kind of response are you seeing?
Yeah, I think when you look at, say, correlation and both correlation, say, and volatility, I think it's something that has definitely evolved since we first introduced Bitcoin in 2017. And I think that clients are really no longer, viewing crypto as being isolated, right? I think that they see it, they see this market as more fundamental now, really integrating more, say, into the global financial ecosystem. I think when you look at crypto and equities, to your point, Mark, there's been a strengthening, a more positive correlation between those two, particularly versus, say, NASDAQ, right? So since 2020, that relationship has shifted, meaning both asset classes tend to move in the same direction, especially when volatility spikes, right? And kind of like solidifies crypto's position as a risk on asset. But I'd also add that while, say, these correlations have been strengthening, they're still they've gotten stronger, but they're still relatively weak, if that makes any sense. I think when you look at crypto and gold, some of the narrative out in the space is that Bitcoin is often referred to as digital gold, and some view it as an inflation hedge. But the correlation, at one point I think was positive, but recently it's kind of like decoupled as market conditions continue to to change in 2025. But I think that this is where CME Group really offers a strategic advantage, right? Since we offer regulated crypto futures alongside other futures contracts like E-mini S&P 500, gold, energy contracts as well. This really allows, say, traders to build strategies that can go beyond, say, a single asset class. We spoke a little bit about basis before, but it also allows, clients to, simultaneously, say, manage risk and crypto, and maybe they're doing that against a position, say, on equities, right? Really, in short, I think that we provide the infrastructure for traders to really act and take advantage of these cross-market moves or views and manage, say, a diversified multi-asset portfolio more efficiently.
Well, a lot of people might be listening to this and say, this is a fascinating thing in and of itself, just talking CME and crypto, because the entire ethos of crypto is, of course, no central clearing party, no man in the middle, no tracking. It's kind of the core impetus behind a lot of these crypto products when they launched. Since then, of course, we've seen a lot of issues, FTX and others, which brought a lot of people around to maybe the notion of, hey, maybe we need a little bit of regulation in the space. Maybe we need something like centralized clearing. Maybe we need a little bit of counterparty risk management. We just saw that play out again very recently out there with some of these waves of liquidations. The notion that the counterparty you're trading with in the crypto landscape may not be there when you need them is still very much an issue that is front and center. But I'm sure, Gio, when people hear the terms CME and crypto together, they say, you know what? That's still contrary to DeFi, of course, the decentralized finance movement that is kind of at the heart of crypto, that is driving a lot of these other venues and other exchanges and other platforms out there. So what do you say to those folks? How does CME compete with the DeFi movement out there in crypto?
Yeah, I think our strategy for competing with DeFi and offshore unregulated markets is really simple, right? I think, we attract institutional capital by providing transparency, price discovery, a regulated market, We provide operational familiarity to a lot of these institutions, right? And I think that institutions have really responded positively to our products because these products clear through established, well-known mechanisms, and then they also integrate fairly seamlessly into existing workflows. Additionally, we provide customer safeguards such as daily settlement, rigorous margining, and really a well-tested default waterfall mechanism, as well as segregated customer accounts. And these are safeguards to the point that you made, Mark, that offshore unregulated venues simply cannot match, right? We've always said competition is a good thing for the market, but the key distinction when we compare ourselves, say, to DeFi, is really regulation and safeguards. And to the point that you made, I think when you look at when it really matters, right? If you look at what happened on October 10th and those massive liquidations where more than $19 billion in value was wiped out across these, offshore, unregulated exchanges, as well, say, as some of the decentralized platforms. There's really virtually no customer protections in place, and it really then speaks about institutional market really executing, say, a flight to quality, right? And as a regulated venue, as I mentioned, we've established those market safeguards at centralized clearing, and full transparency, right? And I think that is really a core proposition. If we look at what happened, say, post October 10th, you saw open interest across a lot of these centralized and decentralized platforms go down, right? Now, contrary, our open interest since October 10th is actually up 35% across the suite, where now we have over 485,000 contracts of open interest. We've added 125,000 contracts in open interest since October 10th. And this has really helped to cement our role as the leading derivatives exchange, crypto exchange, I should say, where we are now number one globally in terms of open interest across each of our four contracts. So we're number one in Bitcoin, Ether, Solana, and XRP futures open interest. So really, in short, we provide confidence, trust, and capital efficiency. And I think that institutions choose us because they need that certainty. They want to know, that their counterparty risk is managed and that their capital is protected. And this is really a feature that is often absent in the unregulated crypto world.
Well, Gio, I can't have you on here without talking and getting your thoughts on all things perpetuals, aka perps. Of course, all these products we're talking about at CME, they begin their lives as futures before we add the options on them. And the perpetual futures side always kind of remained a little bit esoteric, a little bit arcane in the crypto space. It was really for the hardcores out there. I had a lot of people approach me who are seasoned derivatives professionals with decades of experience asking me, what the heck are these perpetuals? So they really took a while to resonate, but we have seen just in the last few months some significant moves trying to make perpetuals a little bit more mainstream. The folks at Robinhood were just on here not too long ago talking about their move to bring perpetuals here into the US. So it does seem like these are products that are here to stay. What are your thoughts on these perpetual futures that are seemingly uniquely suited to the crypto space?
Yeah, it's certainly a trend that we continue to see, right? And at the end of June, we actually announced and launched, I should say, spot quoted futures. So these are perp-like products, right? And in our case, these are products that have a 1-year maturity. So operationally, very efficient because you don't have to manage that many rolls. When you look at our traditional futures and futures on the crypto side, they're monthly contracts, which means that if you want to maintain that exposure, you need to roll that contract, say 12 years if you or 12 times if you maintain an exposure for a year. Compare that to spot quoted, where it's a 1-year contract, so technically you only have to manage, say, one roll. These contracts are also designed to be accessible, so they are among our smallest futures contracts. In the case of Bitcoin, we spoke earlier about the large contract being 5 Bitcoin, micro contract being 1/10. Our spot quoted futures contract is 1/100th of a Bitcoin, right? So fairly small and accessible. And also these contracts then are also designed to be to trade at spot. So they're also, say, capital efficient, right? So, you're getting exposure to over, say, $1,000 worth of Bitcoin, but you're only posting, about $240 to get that exposure. And these contracts have been trading as designed, meaning that they are trading, say, at that spot price, right? And similar to perpetuals, in order to assure that these contracts maintain their connection, say, to the spot price, we also have a once a day financing function that is linked to the underlying liquidity that we see across our, say, Bitcoin futures contract, or more mature, say, Bitcoin futures contract. So it provides a measurable way to create, say, that financing mechanism. The last thing that I'll mention on this is that, in addition to the point that you made, Mark, where you mentioned that these were crypto products, we also offer our spot quoted futures contracts, not just for Bitcoin and Ether, but we also offer them for 4 equity contracts: S&P, NASDAQ, Dow, and Russell 2000. So this really allows market participants who maybe already be familiar, say, with a perpetual type contract. It now allows them access to a regulated contract, where now they could also look to take positions, not just in crypto, but they may be able, say, to diversify exposures into these 4 equities. And since we launched the suite, we had a record 304,000 contracts trade on October 16th. In terms of notional across the 6, we're averaging well over $500 million a day. So we're super excited. We think of these contracts almost as forever style contracts. They require small upfront capital. You get, say, capital efficiency, and these products then trade similar, say, to a traditional ETF or maybe, say, stock.
Well, Gio, you're probably aware, you've probably heard the rumblings out there, but there is a big push to try to expand the trading hours out there for options in particular. We hear it on the equity options side all the time. Whenever there's earnings season in particular is usually when that heats up. But we have seen more rumblings on that very recently. In fact, SIBO down the street just putting a filing out to expand their trading hours. And nowhere is this push to expand the trading hours more central, more integral than in the crypto complex. A lot of people who are crypto native, they're just used to 24/7 markets. We see this all the time on our crypto rundown show. People just assume everything trades 24/7 because they cut their teeth trading crypto. And then when they come over to the world of traditional finance with, your opening and closing bells and everything else like that, they find that a little bit off-putting. Since we're talking crypto here, Gio, and we're talking perpetuals, the other side of perpetuals is, of course, a 24/7 market. Do you foresee CME maybe expanding those trading hours down the road to try to compete more aggressively in the crypto space and try to lure some of that off hours crypto volume onto your exchange?
Yeah, so Mark, we recently announced that 24/7 trading will be available for our crypto suite, so inclusive, say, of both futures and options, beginning, say, in early 2026, and that is pending regulatory review, right? And we really see the expansion to round-the-clock trading for crypto as a natural evolution. Of course, the cryptocurrency market is already 24/7, and we really need to empower our clients with that ability then to allow them to manage risk in real time whenever and at whatever time they need to do so, right? So we want to ensure that our market participants can confidently manage risk in a market that truly never sleeps, right? And please and note that we're just doing this for our cryptocurrency suite, as not all markets lend themselves to operating 24/7.
I love it. Hot off the presses just a few weeks ago here. So a lot of our listeners who have been asking for this for a long time, especially in the crypto space, CME obviously heard you, so we'll see how the regulators feel about that, but that could be a very interesting change. Everyone who's written to us complaining about the gap between the CME contracts and everything else, there's your answer there. Well, Gio, I appreciate you joining us today. We've already run a little long. I have to keep running with the rest of the show, but before we go, I have one more question for you. I'm curious, you said you were there at the onset of these products and really helping to shape the crypto complex. You know, from the days of the original Bitcoin future all the way to now, you just launched XRP and Solana. You've done a lot of growing. You've learned a lot of things about the crypto markets over those intervening years. If you had to go back to your younger self and say, here are some interesting lessons we've learned, potentially painfully, in the world of crypto, what would you say to your younger self? What would you be doing back in 2017 to shape these contracts that you've learned now?
Well, my younger self would have had perhaps darker hair. No, look, I think it's tough to really compare that initial listing of Bitcoin and even Ether to where we are today. But we certainly have learned a lot of things along the way. I think as everyone in the crypto space has, right. But one thing that really has continued to serve us well is really our direct line of communication with clients and market participants. And it's really that communication, that feedback we get, and that's really what guides us in terms of what products we're going to launch, right? And I think that going forward, and even like helps us in terms of product design, right? So I think for us, it's continuing to follow that approach, which has really led to the success that we've seen in the crypto space.
Well, listeners, we have to keep on rolling with the show. Of course, if you want to keep tabs on all things crypto over there at CME, make sure you're checking out our This Week in Futures options reports. Just head on over to cmegroup.com/TWIFO, TWIFO/TWIO. This Week in Options also works. And then click on that cryptocurrency tab, and you too can go deep down the rabbit hole, not just with Bitcoin and with Ether, but now with Solana and XRP as well. And Gio, thank you for joining us on the show. We'll look forward to having you back on down the road. Maybe we can talk about some more crypto products coming from CME.
Thank you, Mark. It's been a pleasure.
All right, listeners, now we have to keep on rolling. We're almost done with the show, but it is time to get a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, welcome to the Movers and Shakers, the portion of the show where we dive deep into what's lighting it up to the light side and to the dark side. I hope you enjoyed that deep dive into all things crypto. A lot of you have been asking about crypto for a while. It's obviously a very hot asset class right now, along with all things precious. So an interesting time to be launching some new products. Also an interesting time to be checking out the Movers and Shakers report. As I'm looking at this chart for the week, listeners, we are biased, I would say roughly 60-40, maybe even closer to that, maybe 55-45 green over red, ever so slightly biased towards the green. That said, the largest percentage mover is to the upside this week. So maybe we'll save that for a second. Let's go to the dark side first. If you listen to our futures rundown, you maybe have some idea of what's going on out there. Number 5 to the dark side this week, feeder cattle off 4.31%. Number 4 to the realm of precious we go, giving some back this week. Palladium off nearly 5.8%. It was number 2 in the other direction last week, up nearly 9% out there, listeners. So not even giving up everything that it gained just last week in Palladium. Number 3, it's lumber, giving off about 6.5%. Number 2, silver, giving up the ghost a little bit this week, off 8.15%. Again, another one that hasn't even lost just what it gained last week. It was up 13.25% last week. And then the big dog to the dark side this week, platinum, off 8.44%. It was number 4 in the other direction last week, up a little over 6% out there. So a wild couple of weeks for the precious metals, as you probably could guess, given the headlines out there. All right, to the light side we go. And interesting, as we saw mostly to the downside in energy recently, but we're getting a little bit of a pop this week. In fact, our entire light side top 5 is dominated by energy. I can't remember the last time we had this. Number 5 is RBOB, up nearly 6%, 5.89%. Number 4, it's WTI, up 7.31%. So getting back everything it lost last week and then some. Last week it was number 4 in the other direction, off 6.36%. So WTI bouncing back a little bit, maybe not the best for your wallet at the pump, but intriguing. A lot of people were debating. We had guests on the show recently talking about the 60 handle and the 58 handle in WTI. So interesting stuff out there as we got below them and now kind of rallying back to them. Number 3, it's Brent, up 7.75%. It was number 5 in the other direction last week, off 6.16%. Number 2, heating oil, up 11.18%. And the big dog this week, nat gas, up nearly 14%. It was number 3 in the other direction last week, off about 9.5%. If you want a deeper dive into nat gas, check out the futures rundown yesterday with our buddy Kevin Green. We kind of went deep into that contract a little bit. Some of the nuances therein, there obviously is some seasonality kicking in. There also is a bit of a contract rotation there, so that's also maybe gumming up the works a little bit, maybe showing a little bit more bullish movement than there is in reality. Again, that's kind of the issue we talked about before with constant maturity futures versus looking at and rolling every front month. There's always that issue with the data in the futures markets, and some of that rearing its ugly head here in nat gas this week as well. But either way, a very energy heavy light side this week, which is fascinating. How many of you had a strong rally in energy on the books and a sell-off in precious? That's kind of the opposite of everything we've seen for this market for the last few weeks to months. So very interesting stuff out there. All right, to the world of CVOL we go, listeners. Remember, you can run these reports for yourselves. CME Group and CVOL is all you need to type into your browser. That is CVOL. And once you do that, listeners, get into that dashboard, set your high-low range to 1 week. And then we go to the aggregates tab. We don't have time to do all of them, obviously. So if you want to go deep into, maybe you want to go deep into crypto, it's there for you. In fact, for whatever reason, we don't include the crypto in our aggregates, but we might have to start adding that because that's certainly a fascinating one as well. But right now, this week, top of our list is the Ag CVOL, 1734 right now, up about 1/3 of a point. And coming off its highs for the week yesterday, 1754, the low 17.02, so pretty much a half-point range for the week. Treasury yield vol going the other direction, 94.20, kind of unched today. The low 93.75, so pretty much bouncing right off its low. The high 100.92, so yield vol pinning to the downside pretty much. Same thing with Treasury price vol, 4.72, up about 0.04 today from its low of 4.68 yesterday. So that's pretty much right at its low for the week. The high 5.01. So Treasury price vol coming back down to earth a little bit as well. And then we have FX vol, another complex not known for being a hotbed of volatility, 7.26 off 0.04 today, right off its low of 7.19 that it hit yesterday. The high 7.61. So pretty much the Treasury complex and the FX complex both pinning the needle to the downside this week. Then we pop the other direction for the aggregate energy CVOL, 54.69, coming in slightly today, off about 1/4 of a point, but still towards the upper end of its weekly range. The high was actually 55.40 that it hit yesterday, the low 52.53. So interesting stuff out there, listeners. Nearly a 3-point range on the week and pretty much close to the upside of that range right now. Then below we have the aggregate commodities CVOL, taking a bit of a break today, 36.85 off 1.6 points. That is the low level for the week, the high 38.92. And then also metals vol coming crashing back to earth this week as well, 28.40 off 3.18 points just today. So they're smoking metals vol. In fact, looking at this chart, you can see the trend for the week, listeners, and pretty much every day with the exception of Monday, they came in smoking vol. So fascinating stuff out here, listeners. Vol getting not quite annihilated, but taken back to earth a little bit in the metals complex. 28.40, the high 33.52. So wild stuff out here in the CVOL this week. Ags and energy getting towards the upper band of their range. Everything else heading towards the downside this week. That's going to do it for the Movers and Shakers report. Also going to do it for this episode of This Week in Futures Options. I want to thank our guest, Vicioso. That's just the best name out there, listeners. The head of crypto products, for going deep on all things crypto with us at CME. If you want to check out the new Solana or XRP contracts, they're available for you over there, cmegroup.com. Head to the /Twifo report if you want to see all of our data over there. That's going to do it for us on Twifo this week. Not going to do it for the network. Back again in a little over an hour to break down the entire day's worth of activity. on the Hot Options Report. What's lighting up our tape? You got to tune in to find out. Back again tomorrow to talk some vol on volatility views. Then, of course, back to wrap up the week for our pro members on Options Oddities. Check it out for yourselves. TheOptionsInsider.com/pro is the place to go to learn more. Then we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.